Okay, so on your on the Moodle page, yours should end at this point. So ignore anything that I've got below that. Is everything that we need for class today. So we are going to be talking about accounting research today, which is extremely important. You will be doing this the rest of your time here. It will be on the CPA exam, and then you will be doing it the rest of your career as long as you stay in accounting. So this is pretty key. It can be overwhelming at first, so don't be like, oh my gosh, she's got to be kidding. All right, it's really to your advantage that we start this in school, because the penalty is so low, right? If you get something wrong, it's not going to be a big deal in this class. We'll talk about it. You'll come in. We'll get we'll get the right thing, and you'll be fine. In the workplace, however, if you turn something into your boss that's the wrong answer, then it has a consequence. So it's really to your benefit to learn how to do the research, learn how to read the authoritative literature while you're in school, and then by the time you get out, you're going to be a guru. Some of you, those of you who were in Accounting 3311 last semester, you got to meet Rebecca. She was one of my former students who came in and talked to us. And she also spoke to the seniors that day. And she is actually considered, she was considered to be the research guru at her previous job. And it was because she started learning how to do accounting research while she was here. By the time she got to her job, they really depended on her to find the right answers. And if you remember when she talked about the ethical dilemma that she had in her job, and I'm sorry for those of you who weren't part of it, I'll be quick about it. But if you remember when she talked about the ethical dilemma she had in her job, the reason that whole situation came about was because she took the time to do accounting research and figured out that they were accounting for something wrong, and then they figured out they were going to have to do a huge write-off, and the company was going to get a loss for the period, and people weren't going to get their bonuses, and it was all because of accounting research. So it really is, it's a very important thing that you be able to do this. So that is why you guys are one of the few intermediate accounting classes in the country that didn't have to buy a $300 textbook for this class. I don't know if you've ever seen an intermediate accounting textbook, but they usually look like this. So my guess is they are probably about $300 at this point. And the reason is because by the time you graduate, some of what is in that textbook is already going to be obsolete. And by the time you take the CPA exam, even more is going to be obsolete. And by the time you start your first job, even more of it's going to be obsolete. Okay? So learning how to read a textbook isn't really going to do you much good. But learning how to do accounting research will carry you through the rest of your career, because what the website we're going to be looking at today is never going to become obsolete. It's always going to have the most current accounting authoritative knowledge on it. So instead of using a textbook, you're going to be actually going to the source. We're just bypassing the middleman that wants to charge you $300. And that's where they're getting their information from, so you're just bypassing that and going straight to the website. Now, as I said, it can be difficult, it can be challenging, because they're going to use, it's written at a very high level. The website, the authoritative literature is written at a high level. And so it can take some time to start understanding what it's talking about and feeling comfortable with it. But by the time you leave next year, I think you will feel much more comfortable doing your own research. And as I said, you're going to have that, you're going to see it on the CPA exam. If you go to graduate school, you're definitely going to see it. And you're going to see it when you get out there in the workplace too. So it's going to, again, we'll start slow, and I will be here to hold your hand the whole way through as you're learning how to do it. But in the end, it's really going to pay off. So go ahead and click on the website that I've got there. And then if you will, just put in, I've got the username and password. So mine's taking a while, so go ahead and put those in. Hopefully yours is going a little better than mine. There it is. Oh, I forgot. I was gonna, let me go back. I'll read it out to you so you don't have to go back and forth, okay? So Username is capital AAA 51733, and the password is lowercase u, uppercase Y, I guess you could actually just read it again, 6, uppercase U, lowercase m, 5, uppercase J, okay? So everybody's got that. 51733. And then hit submit. Okay, you'll do this every time you want to go to the website. I'm going to explain what the website is in just a moment. Go ahead and hit FASB Accounting Standards Codification. We'll always do that first one. And then once you're there, every single time, you have to accept the license agreement, so just accept it. All right. So let me talk about what you're looking at. Next week, we'll be doing the papers and presentations, okay, that hopefully you've been working on with your partner. And one of the things that we're going to talk about next week is the FASB, the Financial Accounting Standards Board. Who's doing that for us? Who's got FASB? Okay, Jessica and Marcus, great. I'm not going to steal too much of their thunder, but I do need to explain a little bit about the organization so that you'll understand what we're doing. Okay, so the Financial Accounting Standards Board, in the simplest of terms, is the group that sets accounting standards in the United States. All right? So you probably talked about them briefly in Accounting 2211, but I doubt that Professor Beard spent a lot of time. She probably just told you kind of where the rules come from. So that is where the rules come from, and we'll talk a lot more about them and how they got formed and all of that stuff, how they set standards and everything. We'll talk about that next week, okay? But for now, really what you need to know is that we have a group of people in the United States that set accounting rules. They set the standards that we go by, and they're called the Financial Accounting Standards Board, or FASB for short. Now, the FASB has, and this has been fairly recently, within the last, I want to say 4 or 5 years, produced a website that anybody can use in order to figure out what is the accounting standard for a certain problem that you might be facing in your company, or if you're an auditor and you're trying to figure out what's the right accounting for your client, or whatever it is. They created a website that has all of the standards on it. Okay, so it used to be that things were in a lot of different places, and it was hard to figure out what was the current rule. And now everything is available on this website, which makes our life so much easier. It's called the Accounting Standards Codification. Okay, so codification being, it's a code, right? So Accounting Standards Codification. And we can go to it anytime, and we can find out how to account for anything, hopefully. As long as there's a rule for it, we can find it on here. The way that we go through is, you can't just get to it. You can't just, like, if you were personally just wanted to do this, you couldn't just do this. You have to pay to use the Accounting Standards Codification. So when you go to work for an accounting firm, if you have to do research, they will have a license for you to be on it. We go through an organization that has a student way, and so it's real cheap. It's like $250 for the whole college for the whole year. So all of us can use it. It's only $250, so I'm really grateful for that. So we can get on it using that password and using that username. You'll be able to get on it anytime you want. It's an unlimited number of students, so you'll always be able to get on it. Just make sure you go back to topic 3, and it'll be there for you. Okay. So what we're going to do today is we're going to kind of navigate around the website so you can get a little bit familiar with it. You're also going to be doing some reading on your own on the about the website, but that won't be till the week after next, after you've gotten your presentations and papers done. That's all you're going to be responsible for until next week. But you'll be doing some playing around with it yourself at some point. But yeah, and I'll save talking about some of it until next week when we talk about the FASB with Jessica and Marcus too. Because I think it'll make more sense in context. All right, so if you pull up a different tab and pull up Connect again, if you will. Let's not get out of this one. So sorry if you have to log in again. Maybe you're still logged in. And then topic 3 again, and then there's a Word document, so if you will, just go ahead and open that. It's called Research Example.
Excuse me.
And just let me know if it doesn't work. Oh, okay. If you enable editing, sometimes is it not working for you guys? Is it doing the same thing? Save it. Try saving it and opening it, so that if it's not working, I mean I've got mine on L drive, but just save it if you need to, and then open it. And it should work then. Okay. So we are going to pretend today that we are auditors, okay? So we're looking at the financials of a firm, and we are trying to help them determine how to account for something, all right? So in our example today, we're dealing with our client Great Buys, and Great Buys sells computers, and they have some computers at the end of 2015. And any kind of technology you can imagine that this is going to be a common problem. They've got some computers in stock that have lost value, right? So a newer version has come out, and they're not going to be able to sell it for as much as they paid for it. Okay, so you can see our example here. They've got several older models in stock. They originally paid $700 each to their supplier for the computers. But now they estimate that they can only sell the computers for $200 each. Okay, so now we have to figure out how are we going to advise Great Buys that they need to account for these computers. Okay, I think you can probably, even without knowing or doing any research, you can probably see they've got a problem. All right, if the computers are not worth as much as they once were, we're probably not going to allow them to continue to report the computers at $700 each on their balance sheet. So you may remember from Accounting 2211 that accounting is conservative. Okay, do you guys remember that word? All right. So accounting is conservative, and basically what that means is we report assets at the lowest value, not the highest value that it could possibly be worth. So most items we report at historical cost. Hopefully that rings a bell. Okay, so most assets are reported at historical cost, which is how much we paid for them originally. But in this case, we originally paid $700 for these computers, or Great Buys did. But we're thinking, it might make us slightly uncomfortable to continue reporting those computers as having a value of $700 if we now can only sell them for $200. But we don't just want to go to our client and say, this makes us uncomfortable, so you need to write these computers down. They're going to laugh at us. I'm sorry that it makes you uncomfortable, but we don't have to write these down. So what we need is proof. We need to go and do the research and look at the accounting standards so that we can go to Great Buys and say, here, according to the FASB, you need to do this with these computers on your balance sheet. All right, so that's what we're trying to do. So you can see that on the next page, I have the beginnings of a memo, a research memo. So anytime you do research, you want to document that you did it when you're at your job, because you may not stay at that job for very long, but somebody else may need to see what you did and why you accounted for something the way you did. So you always want to make sure that you document any research that you do so that somebody coming behind you can follow what you did. And also, if, heaven forbid, someday your company got sued over something, again, you may not be there, you might be there, but either way, you've got proof of why you told your client this is how they needed to account for this. So you always want to document. So this is the beginnings of a research file memorandum. And you can see that you might want to put your name in the prepared by there. So again, if somebody were to need to know why we told Great Buys to account for their inventory this way, they would know to come to you if they had any questions. Okay, so I've put a little background. Oh, looks like I forgot to put my period after inventory though. That's very sloppy. So basically, Great Buys, we know now at the end of 2015, had computers, 30 computers on hand that had a original cost of $700 that now can only be sold for $200. So before we start just willy-nilly going into the website and doing some research, we need to define what it is that we're looking for. That's going to help us. So I wrote a statement or a question, basically, of how should those computers be reported on the balance sheet at the end of December, on December 31st, 2015. So how should they be valued on the financial statements as of December 31st, 2015? That's what we're trying to find out. And then before I do the research, it's a good idea to think about what are the possible alternatives. Okay, before I go in and actually look and see what the standards are, it might help me to get some idea of what I might find. Okay, so one possibility is we don't have to do anything with them. They paid $700 for them. They can report them at $700. On the opposite end of the spectrum, we could say they have to write them completely down. They have to take the computer value from $700 each all the way to $200 each, and they need to report those computers at $200 instead of $700. So they either can report them at cost of $700 or market value of $200, and maybe there's an in-between. Maybe we write them down some, but we don't write them down all the way to 200. I don't know. So we want to, those are the possible alternatives. And now I can go in and do the research to figure out what is the right answer, and then I can fill out the rest of it. Okay, so let me see if I have a marker. If not, we'll just talk. No, of course not. Okay, that's all right. So before, again, go ahead and click back onto the codification website, if you will. So before we start searching around, there's a couple of ways that we can do the research. Okay, the website is very nicely designed because there used to be another website before this one, and there was really only one way to search it, and that was with keywords. But now there's several different things you can do. So let's kind of look through it real quick, and I'll show you some of the different ways we could search, and then we'll put in some keywords just to try it that way. All right? So if you look on the left-hand side, you'll see the codification right here, and then you see some different types of accounts. Okay, so you've got assets, liabilities, equity, revenue, expenses, and then some other possibilities. Like if we were looking for a specific industry like the airlines, sometimes certain industries will have different accounting. So in that case, we could look at industry if we wanted to do that. But I don't think that that Great Buys is going to be some unusual type of industry, so we're going to ignore that one for right now. So if I'm concerned about inventory, which of those topics am I going to do my search in?
Assets.
Assets, right? Okay. So I would come up to assets, and then you can see that a menu appears to the right of assets. And it's got numbers next to it, and then you could look and you could say, aha, there is number 330, inventory. okay? So inventory, so what that tells me is that inventory is in topic 330, all right? So the way the codification is set up is by topics. And so each topic has its own 3-digit number. So in this case, I now know that inventory is topic 330. So I can look at this and say, well, there's overall inventory, and then there's very specific oil and gas or mining or films. Well, none of that applies to Great Buys. They're just a retailer. So I probably don't need to go down to those specifics, but I could just look at the overall. Oops, I could if I had clicked off of it. Oh, come on. No, that wasn't what I wanted to do either. Well, I can do it this way. If you've got it perfect, I'll just do it my way since I got it. Okay, so now I can click on overall, since that's where we were supposed to be. And it gives me a bunch of different subtopics. Okay, so the 330 inventory is the overall topic. I shouldn't have used that word, is the big topic. And then overall is the next subtopic, okay? And then there's sections. And so now you can see all of the sections down here. All right, so I could look through and I could say, okay, now what I'm trying to do is measure the inventory after the initial purchase date. So which of those sections do you think would help me with that? Subsequent measurement, absolutely, okay? So subsequent measurement would help me, and so I could just go down and click on that. And now I'm actually exactly where I need to be to get the answer for this problem. Because it tells me, if I start reading this paragraph here, a departure from the cost basis of pricing the inventory is required. Okay, so that means we have to do it, right? Is required when the utility of the goods, oh my gosh, they're bringing econ terms in, right? You guys remember utility from econ? All right, is required when the utility of the goods is no longer as great as their cost. So where there is evidence that it will be less than cost, and they give reasons of why it might do that, the difference shall be recognized as a loss in the current period. Okay, so that's telling us how we're going to have to account for this. It's going to be a loss. This is generally accomplished by stating such goods at a lower level commonly designated as market. Okay, so basically what they're saying there is if the inventory has lost value, okay, that's the utility there. If the inventory has lost value, then we're going to show a loss on the income statement, and the inventory itself is going to be reported at market value instead of its original cost. Now, I don't know what market value means necessarily, but notice that it's in blue and it's underlined. And so basically that means we can get a definition for it. So you can either click on it and go to the glossary, or you can just hover over it and it will give you the definition right there, and you don't have to go all the way to the glossary. But what it says basically is that the term market means current replacement cost. Okay, so that means how much could I buy the computer for now if I had to replace it in my inventory? So they originally paid $700. How much would I pay my supplier now? Unless, it also says that market shall not exceed the net realizable value. Net realizable value, guys, is just selling price, basically how much you can sell it for. Okay, and we wouldn't want market to be less than net realizable value less normal profit margin. Now, I'm not trying to teach you lower of cost or market for inventory today. Okay, we'll get to that in Accounting 3302. So I'm not going to get too deep into those definitions today. All right, we're just going to keep it a little bit simple, and we're going to say, since the only value we have is selling price, we're just going to say that that's market for today. Okay, we'll get, as I said, we'll get more deeply into it next semester as to how do we figure out what market is when given those three definitions that they just gave us? So basically, it's telling us that if the selling price is less than the original cost, we have to write it down to the selling price, is what it's saying. But I do want you to notice something here. Right underneath that paragraph, it gives us something called pending content. All right, and notice that basically what they have done is they're changing the accounting for this. Now, notice that the transition date is December 16, 2016, which is why it's pending. All right, it's still got the rest of this year before it's going to go into effect. However, I think we need to be, we really need to acknowledge that the accounting is getting ready to change, and we'll need to put that in our research memo. But I don't know how the accounting is getting ready to change. So let's click on this let me go back real quick. You can stay where you are. Let me just go back real quick. And I want to point out a word. Notice that it says paragraph superseded by accounting standards update. Okay? Superseded means that there is new accounting for it. So this paragraph up here will no longer be GAAP. Remember, generally accepted accounting principles, it's no longer going to be the standard. That there's something that's going to replace it. So when you see that word superseded, that means something is going to replace the current accounting for it. So let me go to where you guys are. All right. So basically what this one's telling us is that currently we use the lower of cost or market rule, and market can be replacement cost, net realizable value, or net realizable value less normal profit margin. Okay, we just saw that in the definition of market, right? But this is now saying that the only thing that market will be, says as long as we're using FIFO, the only thing that market will be is net realizable value. See that right here? The amendments to this update require an entity to measure inventory within the scope of the update at the lower of cost and net realizable value. All right, so now instead of having to deal with replacement cost, net realizable value, and net realizable value minus normal profit margin, they're actually simplifying it. And now the only thing we're going to use is net realizable value, which, as I told you just a minute ago, is basically selling price. So once December 16, 2016 hits, we'll just have to compare the cost to the selling price and we'll be done. So it's going to be a lot easier than what we have to do right now. All right, so just make sure you notice if you're doing research and you see that pending content, make sure you understand how to account both ways, because that accounting is getting ready to change. And that's one of the reasons, again, that we don't use textbooks, guys, because if we were using a textbook, we wouldn't have a clue that the accounting was getting ready to change. All they would have in it was the lower of cost or market using those three markets, and we wouldn't have any idea that on December 16th it was going to change, okay? So that's why using the authoritative literature makes so much more sense, is because we have the most up-to-date information, so we know that we're giving our client the correct accounting. Okay, now let's go back to the original page. So just kind of back it up a little bit. You may not have to go back quite as far as me, because I clicked a few too many times on mine. All right, so back to the original page. Let's just say that we were looking for something that we couldn't find easily in that left-hand menu over there. All right, so it wasn't so easy to just say it's inventory. We could find inventory, and we did what we did. We can also use keywords to search. So if you see, you can look up here in the top right-hand corner. There's a search box. So let's just say that we looked at our problem here, and the keywords that we want to do are like maybe loss and inventory value, something like that. Okay? You could use whatever words you wanted to, but we'll just go with that. And then we could click go or hit enter. possibilities. It's basically like doing a Google search, right? It's gonna give us possibilities by looking at those keywords. So the first one, and this is a little bit more difficult because you have to be able to discern what's relevant and what's not relevant. And I think that even on your third day of intermediate accounting, you can probably look at that first one and say, that's not relevant to what I'm doing, right? Foreign currency. Well, this doesn't have anything to do with a currency from another country. That's not what I'm trying to figure out. So I could ignore the first one. The second one looks like exactly what I want. And you notice it is the same subtopics and sections that we just looked at, right? It's topic 3030, which is inventory, subtopic 10 overall, and section 35 subsequent measurement, which is exactly where we were. So if you click on it, it'll take us back to exactly where we just were. Okay? So you can search either way. It does not matter. Again, it's probably easier if you can use the menu over here, but you will not always be able to do that. It's just not going to always be so easy. Now, if we did happen to know already what the topic was, we didn't know what the accounting was, we knew what the topic was, we could also just type it into this first box up here. We could just type in 330. If we knew that inventory was 330, and it would take us to that menu that we looked at first. Okay? So basically there are three ways to search the Accounting Standards Codification. The menu on the left, key terms in the upper right, topic number in the upper left. So hopefully one of those will work for you and you'll be able to get to what you need. Nobody expects you to know the topic numbers right now. I don't have the topic numbers memorized. But if you do become the research guru in your firm, you may very well eventually know where a lot of the different topics are, and you can just throw it right into that topic box and go. Okay, and so you will be on the CPA exam, those of you who decide to sit for the CPA exam, you will be doing something like this on the CPA exam, where you will do a simple research question and write it up in a memo form. All right, so you will be at a big advantage because that will be easy to you by the time you graduate and have to sit for the exam. All right, so I think that we have the answer, the solution that we need for our client. So let's go ahead and type it up for them. So let's go back to our Word document. Don't get out of the codification yet. Let's go ahead and type up what our client needs to know. Okay, so I'm going to do, you guys are just going to follow my typing, which it's always horrible to have people watch you type because you tend to mess up a lot. But for this one, I'm going to write it out the way I would do it so that you can see what sort of things would I put in the research memo, all right? Because you haven't done one before, so I wouldn't expect that you could figure out exactly what was relevant and what wasn't. So I want you to have this as your example because the week after next, after we're done with the papers and presentations, we're going to start researching for our client WebWorks. And so then you're going to need to be able to do this, all right? So let's go down to the proposed solution here and go ahead and click off the bold. So we don't want this part to be in bold. Okay, so here's what we found based on our research. Inventory should be reported at the lower of its original cost or its current market value. So I'm going to put currently, because we know that this is about to change, I am going to put that currently market value is defined as the middle of replacement cost net realizable value, and I'm going to put in parentheses that that's the selling price, okay, or net realizable value minus normal profit margin. say a quick word, because I just love accounting and so I like to go off on tangents. Who's doing the International Accounting Standards Board next week? So Eric, Adam, and Kane, who's playing baseball, right? Okay, so again, I don't want to steal their thunder, but just kind of, this will get you like, it'll just whet your appetite for all the exciting things we're going to talk about next week. So the FASB, woohoo, we're really excited about that. And then we're going to talk about the International Accounting Standards Board, so it doesn't get too much more exciting than that. But basically, the FASB, as I said earlier, sets standards for companies in the United States. They do not set standards for any other country. So no other country, no companies in another country, just the US. So there is a body that tries to set standards for the world, and it's called the International Accounting Standards Board. They have their own set of accounting standards, and the way that they do this is the way that we are going to. So if you were to look up at the International Accounting Standards, which are now called IFRS, International Financial Reporting Standards, they would say use net realizable value as market. So what the FASB has done with this change is they have taken the US standard and it's now matching with the international standard. It's called convergence. So we're trying to get our standards and the international standards to be more similar. And so I just wanted to, I don't know, it didn't have anything to do with this, but again, it's important, and we'll learn about that next week. Okay, so hopefully everybody's caught up while I was talking. All right, so since the computer's market value, which was $200 each, is lower than their cost, which was $700 each, the inventory must be written down to market value. Okay, so the computers will be reported on the balance sheet at $6,000 total. And the way I get that is up there in that possible alternatives, $200 times 30 computers, $6,000. And we also found out that we have to record a loss on the income statement, right? So a loss in inventory value of $15,000, which is the original $21,000 value minus the new $6,000 value. Will be reported on the income statement. Okay? So we've now told Great Buys exactly what they need to do. They need to report a loss in inventory value of $15,000, and they need to show the computers at a total value of $6,000 on the balance sheet. So the explanation and documentation section is how we support what we just said. Okay, because if maybe I'm the CFO at Great Buys, and you come to me as the auditor, and you tell me that I have to take a $15,000 loss on these computers, and I laugh in your face. And I'm like, there is no way we're writing these computers down $15,000. Do you know what that's going to do to our income? I need to be able to prove to the CFO that he has to write down the value of the computers. So I'm going to tell him how I did the research. So research was conducted using the FASB Accounting Standards Codification. And I put the date. So So on February the 10th, 2016, okay? Because we know that the accounting is gonna change, right? So I need to show exactly when I did my research to show that I used the most current GAAP. Because eventually, it's not gonna be GAAP anymore. Now I'm gonna tell him exactly what topic I used. I used topic 330, and this is how you report it. -10, okay, remember that was overall, so inventory is 330, 10 was overall, 35 was the section, that's the subsequent measurement, paragraph 1. Alright, so if I needed to figure that out, here's what I would do. I would go to the codification, I'm in topic 330, I'm sorry, yeah, topic 330, subtopic 10, so I click on 10. Subsequent measurement. Okay, so basically what I'm doing, guys, is I'm putting a decimal between these three pieces. So 330-10-35, and then here's the paragraph, it's 35-1. Okay, so if I were using the whole thing, I wouldn't necessarily have to put the paragraph, but I'm really only using paragraph 1, so I'm going to tell it paragraph 1. All right, so topic 330-10-35-1, provided authoritative guidance. This paragraph explains the lower of cost or market rule for inventory and states that inventory must be shown at market value when the market value is lower than the original cost. Okay, so now the CFO can come to me and say, we're not writing that down, and I'm going to say, well, yes you are. Okay, they don't actually have to. But if they want us to give them a clean audit opinion, they have to follow GAAP. So if they want to follow GAAP, they have to write this down. And we've given, and this, now he can go to the website himself and look at exactly where we were and do his own research to make sure that we're right if that's what he wants to do. Okay, so what we might want to do at this point is just review the rest of this section to see if there's anything else that's important. So the rest of it kind of explains the reasoning, okay? So notice that it says, the cost basis of recording inventory ordinarily achieves the objectives of proper matching. Okay, you guys remember matching from Accounting 2211. And so it kind of just explains why we do the way we do. I'm just kind of skimming at this point to look through and see if there's anything else that I need the client to know. okay? Paragraph 9 talks about what to do if you've got like more than one item, like more than one type of inventory that has lost value, so it tells you whether you can look at it all together. Okay, now we're just getting kind of specific. Okay, but do notice paragraph 3514. It tells us that in the case of goods which have been written down below cost at the close of the fiscal year, such reduced amount is to be considered the cost for subsequent accounting purposes. All right, so basically what's that saying is that let's say that something happens and the inventory regains value. What that is saying is that it doesn't matter. You can never write it up again. Once you have written it down, you can never write it back up. So we might want to let our client know that, just so they don't they don't say, well, what if this regains value? Then you're going to put it back up, right? No. Even if it regains value, it has to stay at the $200 that we've written it down to. So let's just mention that to them in our memo. We'll consider that to be other issues here. So we'll say further authoritative guidance, which I just spelled wrong, authoritative, there, thank you, guidance provides that if inventory is written down in value, that value becomes its new cost basis, and it may not be written up again, or it may not be written up even if value is regained. Okay, so I think that way we answered their question before they ask it. All right, and I think that we need to add one more paragraph here, and that's just to explain that the accounting is about to change. Because for the 2016 statements, it's going to be different. So let's just say that also on December 16th, 2016, the accounting for inventory, when FIFO is used, remember first in, first out, that's what Great Vise uses, will change. Market will be defined as net realizable value which is sales price less any disposal or transportation cost. All right, so that's our research memo. So hopefully we have been really thorough here, and we will answer all of our clients' questions, or if it's our boss in the accounting firm. Who's doing the presentation on accounting firms? Who's doing that one? Josh, is that you guys? Yeah,
When
that's it.
did we pick groups, or when did you give groups?
I'm sorry,
When did you make groups?
why did I do it?
No, when?
Oh, when? Oh, it's been on Moodle since day one.
Where's it at?
I'll show you. It's on the topic number 2. If you click on the paper, they're right there. Josh and Jared are gonna be doing, they're gonna be talking to us about public accounting firms. And so just so you know, if you, let's say you guys were doing this research as a staff accountant, so somebody who was just coming into the firm, you might be turning this into your senior, who would be your boss, basically. And so they would be reviewing your work after you completed it. So what you may want to do is go ahead and save what we just did somewhere, because this is going to give you a guide when you go to do your own research. So I would save this so that you can look at it. Okay, so questions on anything we did?
Will it always will all your answers always be found? Or
No,
no?
they will not necessarily, at least not quite so neatly as what we found today. I picked a topic that was fairly easy to cover and find. No, if you have a company, when you actually start auditing, when you first start, you're not going to be given complex, extremely complex accounting issues to deal with. But when you get up into the firm a little bit, you've got some experience under your belt, you're going to find some issues that like if maybe you're auditing Coca-Cola, so you work for EY and you're auditing Coke. That's a big company. All right, so the accounting for them is extremely complex. So you're going to find some issues that you're not sure. How do we account for this particular issue? So you could do your research, but you're not going to necessarily find a paragraph that says this issue should be accounted for like this. Okay? So in that case, you're going to have to take what's given in the literature, and then you're going to have to use your professional judgment, and then you're going to go to other people in your firm and talk to them and see what they think about the issue. And then there might be somebody in another office in another state that's dealt with the issue, and so you might talk to them. And so, accounting is not black and white, guys. You're going to find that really quickly. Actually, the week after next, you're going to get your first taste of that, because we're going to deal with an issue with WebWorks that doesn't have a black and white answer. It's something we're going to have to use some judgment on. So it's very rare, I would say, that you get an actual, perfect solution the way we did today, where it really fit the situation and we knew exactly what to do. A lot of accounting is judgment, which is why I'm going to train you into how do we use professional judgment in this class, so that when you get out there, you're going to get, you'll be like, oh yeah, okay, I can handle this. I can handle uncertainty. There is a lot of uncertainty in accounting. People think, it's so boring, and you just sit there and you do your little debits and credits. But accounting is extremely interesting and very exciting. It's a lot of uncertainty. And when we're talking about money, people get really, they get really invested in the answer. So if we tell Coca-Cola, here we just had a $15,000 loss, right? If we tell Coca-Cola that they're going to have to take $150 million loss on something, they're probably going to be a little upset about that, and we're going to have to go back and forth. And it probably isn't, something on the website that says exactly that you have to take a $150 million loss. And so we're going to, there's going to be some negotiation between us and the high ups at Coca-Cola to try to figure out what that loss should be. But we've still got to be able to back it up with something. And so we need to be able to do the research. So that's a great question. It's not going to always be so cut and dried. And a lot of times you're not going to find the exact answer that you need. In here, you will, for the most part. Because I don't want you to get frustrated early on, okay? But when you get out in the real world, the questions get more complex and harder. But the good news is you won't have to deal with that first thing out of college, right? Most of the time. That's where when you develop some professional judgment and you're higher up in the organization, then you're gonna have to start wrestling with those harder questions. But if you remember, once again, when Rebecca, I mean, she was only about 5 years out of school when she found that issue that cost the company, caused the company to go from a profit to a loss and cost everybody their bonuses. So it's not like, it's something you won't see, you will. Other questions? Okay, so let's talk about what we're gonna be doing the next couple of weeks. So Monday and Wednesday will be presentations. Monday, everyone's paper will be due, because I wanted to make it as fair as possible. I didn't want, the Wednesday groups to have way longer. They have a little bit longer, a couple of days longer on their presentations, but everybody's paper is gonna be due on Monday, okay? Keep it as fair as possible. So we'll have hopefully we'll get through 4 presentations on Monday, and then 3 on Wednesday, okay? And basically how we're gonna be working is chronologically, okay? So the overall picture of what we're trying to do on next week is we're gonna be looking at the accounting regulatory environment. Accounting doesn't operate in a vacuum. It's not just a textbook with answers and then we go along our merry way. As I said, accounting, when you're dealing with money, people are very invested in what you're doing. So there's a lot of government organizations that are involved, there's private organizations that are involved. So we need to understand, if you're gonna go into this profession, who do you answer to? Who sets accounting standards? Who's involved and how does it all play together? Okay? So we're gonna start with the SEC, the Securities and Exchange Commission, and then we're gonna talk about the AICPA, which is the trade organization for CPAs, but they used to set accounting standards. So we'll talk about why they don't anymore. Then we're gonna talk about the FASB, that does currently set accounting standards in the US, and then we'll talk about the, let's see, does it go, Adam, what day do you guys go, Monday or Wednesday? Do you remember?
How do we see that?
It's on your sheet.
Your Word document?
Yeah, the Word document. I can't remember who's, no, okay, you guys go Wednesday. Okay, so the PCAOB will be our last organization on Monday. So that is the organization that sets standards for auditors of public companies. So there's a lot of people involved in this whole accounting thing, okay? Then on Wednesday, we'll pick back up with the International Accounting Standards Board, so the board that sets international accounting standards. And then probably the one that's going to interest you the most is going to be the CPA presentation, because you're going to learn how to become a CPA in the state of Georgia, okay? And then the last one's going to talk about public accounting firms and how they're structured. So it's a lot of information that we're going to see in those 2 days. But I think that you will have a lot of fun with it. It's going to be different than any presentation you've ever given, because I'm going to interrupt you a lot, okay, to throw in extra information. So come in and, I want you guys to come in very relaxed on Monday and Wednesday. This is not business communication, all right? I want you to come in very relaxed. I want this to be, it's really all you're doing is you're just teaching the class that day with your piece of knowledge. Yeah, go ahead, Josh.
Mine says, paper due February 9th, the reason says doing the letter, so that's supposed to be good.
It should be the 15th and 17th. I apologize if I didn't correct it on there. I'll do that today. I'll fix that for you. Okay, yeah, papers due the 15th, presentations the 17th. I'm sorry, but I didn't fix that. Yeah, so it's going to be very casual. So it's almost going to be like a talk. Okay, so you'll be in the front of the room, yes, and yes, you should have some kind of PowerPoint, but it's going to end up being a conversation where I'm going to throw in a lot of information, and we're just going to kind of have fun with it. So just be prepared to be interrupted, which you probably aren't most of the time when you present, so don't let that throw you. I'm just going to throw in like extra information or tidbits or things like that I want you to know. Yeah?
Do you want like APA style and all that for the paper?
Put a bibliography on it, I guess, if put some works cited on it. I don't really care that it's perfect. If at this point, if it's easier for you to just do it APA because you know how to do it, then just do it. That's fine. But I don't care if it has a running head on it. Okay? Now. Yeah, I know, and that's good. I'm glad Professor Viren has got you guys brainwashed, and I got you doing it, that's fine, but I'm not gonna be picky about that. Really what the paper is gonna be, I'm gonna distribute those, I mean, basically, I'll have them on Moodle. So that there'll be a take-home part to the first exam, which is not for a very long time. But there'll be a take-home part to that where you'll use the papers to kind of help you. So I just provide those to everybody else. So really, it's just you, instead of you having to learn all of that on your own, you're teaching each other is kind of what it is. And so it ends up being a lot of fun. And it's a little bit, you'll probably leave on Monday going, because you'll be shocked at the amount of information we cover on Monday. But the good thing about it is that we will talk about those topics throughout the entire rest of the time you're here. I will bring up the SEC constantly. I will bring up the AICPA constantly. You can ask the seniors. I still ask them, okay, who set standards before the FASB? And they go, and they try to remember the three-digit, the three-letter acronym, and they sit there, and I'm like, Committee on Accounting Procedure, and they're like, oh yeah, okay. So we bring up these presentations constantly through the rest of your time here, which is fun. So it's really good information. Okay, so that'll be next week, so that'll be what we're doing next week. So there's no homework, for tonight, except to get ready for next week with your paper and your presentation. The week after that, we will, I guess on Monday we'll be back in here. I forget now that almost everybody has a laptop, but I didn't want to assume that everybody has a laptop. So here's what I want you to do. If you do not have access to a laptop, would you just email me and let me know that, and then I will reserve the computer lab for every time we need to be on the computer. But if I don't hear from anybody, I'm going to assume that you have a laptop and we can just meet in 308 and you'll have your laptops, okay? But I didn't want to, I didn't want to make anybody feel bad. It's okay if you don't have one. It's fine. We can meet in here. This room is always available. But I think you guys would probably be more comfortable on your laptops sitting in 308. So just let me know if you do not have access to one. I'll just reserve the computer lab every time we need computers, okay? So the next week we will be starting our review of WebWorks, okay? I don't expect that you know what a review is, don't stress, all right? But we're gonna really be starting with our client that I introduced you to on Moodle last week. And so we're gonna be talking about them. We're gonna start looking at their financial statements. We're gonna have some issues that we're gonna have to research for them. And then we're gonna help them get ready for their, with their statements that they're gonna give the bank to get their loan, kind of stuff, okay? So it's a lot to look forward to. The next 2 weeks are a lot of fun in here. The presentations are a lot of fun, and then starting out on WebWorks is a lot of fun too. You'll be surprised how much you already know from 2211, so I think that'll be cool. Okay, so any questions on what we're gonna be doing? Okay, well, if you have any questions as you get your paper and presentation ready, you just let me know. Just send me an email, I'll be happy to help. If not, we'll be in the classroom on Monday. And again, remember, if you don't have access to a laptop, let me know. I won't let anybody else know. Just let me know, and I'll book the computer lab for every time we need the computers, okay? All right, I'll see you on Monday. Yeah.
Hey, Sam.